Hey folks, I'm best-selling author of The Power Zero, David McKnight. In today's video, you'll see part 6 of my conversation with CPAs Greg O'Brien and John Malone, in which we discuss whether or not the IRS is planning on taxing your Roth IRA.
A couple other things here, if you've gotten questions on it, and I have some curiosity. I've heard you speak about it before. So can we talk a little bit about legislative risk? So you mentioned at the beginning, I love the analogy of, when there's a reason they call a 401k or an IRA, they call it qualified plans, right? Because they're sections of the tax code, IRC 401, right? So we are dealing with laws, and if anyone's been following what's happening in Congress right now, like we're talking about undoing laws back to 2022 in some cases, and we're like in 2024. So they will do stuff crazy like that. So with someone that's made the promise, and we had a question on this, so someone said, hey, Governor, I'm shaking your hand that I'm going Roth all the way. The promise I'm making is I'm going to pay you tax at 22%. You're promising me that I'm not paying tax later. Like, do you hear anything about legislative risk? Like, what stops Uncle Sam 25 years from now saying, hey, we're going to put a 2% excise tax on Roths? Like, what are your thoughts on the legislative piece of this?
Yeah, so a couple of thoughts. I would say that so long as we're marching into a future that's frankly apocalyptic from a financial perspective, all options are on the table. So they could tax your Roth somewhere down the road. Not likely. They're more likely to say you can no longer put money into your Roth. I don't know why they would do that, because look, let's face it, Roth IRAs are the one thing that the federal government and the average American citizen likes. Why? Because the Roth IRA gives the federal government money today. 401k gives the federal government money 30 years from now, right? So you'll see in a lot of these legislative bills, to pay for these expenditures, these omnibus bills, they'll do things like say, if you put money into the match portion of your 401k, it has to go into Roth, or something like that. They'll do things that force you to put money into Roth IRAs, or they'll do things that make Roth IRAs more favorable, right? Or Roth conversions, at least. They took the income limit off of Roth conversions, I think, back in 2010. So Roth IRAs are the thing that both the government loves it because it gives them more revenue today, and Americans love it because it helps shield them from the impact of higher taxes down the road. So that's my first thought. My second thought is, you got to recognize that there's only 5% of the cumulative retirement balances across the country that are in Roth style accounts right now.
Really?
Only 5%. So where's the big target? The big target is not on the Roth IRAs. It's on the $35 trillion of IRAs and 401ks and 403bs and SEPs and SIPLs out there. And historically, the federal government's always told us, look, we're either going to tax you on the seed or the harvest. That's always been their walk and their talk. If all of a sudden they say, we're going to tax you on the seed and the harvest, and we're going to tell you about that ex post facto, that's not going to be cool. And a lot of Americans aren't going to really like that. It'll be much easier to say, look, tax rates have ebbed and flowed over time. And particularly they've ebbed or they've flowed, they've gotten higher when we're in a crisis, and we're marching into a crisis. So it's much easier to say, look, we got to raise tax rates, and we're going to raise tax rates on that $35 trillion to be able to bail ourselves out. That's the likely scenario. So I don't see anything's possible, like I said, but I don't see Roths coming under attack in the same way as I don't see life insurance retirement plans coming under attack.
Interesting. Yeah. I mean, I think, not that this type of life insurance is under attack, but if recently there's been a lot of headwinds on the life insurance strategy of the billionaires, right? And I think a lot of times those things get it. And what I found is a lot of times these things get attention. You'll see some talk about it in Congress, and then for the reasons you just mentioned, David, it goes nowhere, right? They end up, it's a lot of hot air. Hey, we're going to do this, we're going to do that, and people kind of scramble, and then it kind of fizzles out, right? So that's kind of my opinion on it too, is there's a lot of talk about these things changing, but ultimately when it comes down to it, they want us to put money in Roth today because we're paying that tax. And politicians, they live in these short windows, right? They want to be the hero for the next 2 years and balance the budget and kick the can to the future. So,
okay, folks, that was part 6 of my interview with CPAs Greg O'Brien and John Malone. In the next 10 years, I'm looking to put 100,000 Americans on the road to the 0% tax bracket. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes down the road, Head on over to davemcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.